What's up, guys? Reviewing Google stock today. So looking at Google here, we had a big movement over the last month. And I like to think if it makes a 50% retracement and holds, that's okay. So looking at this, 150 up to 181, that's about 31, 32 points. That's a 20% move, as you can see. But now Google has pulled back from 181 down to 162, about 10%. That's half the move right there. And I think as long as it can hold this 162 level, we are in business to continue to keep going long on the stock. I just want to make sure that it is going to hold this level right here. And as you can see, it is holding up quite well, but we'll see. 171 down to 166. If Google this week pulls back into this demand zone at 162, then I'll be looking to buy 162, 163, and I'll be looking to make a move back up from there, going from 162, 163 back up to retest the high of 171. So that's Google in a nutshell. That's what I'm watching right there. Amazon, looking at the 1 month chart, very bullish. Look at the 3 month chart, very bullish. But as you can see, there is some resistance at 191, but right now it's currently trying to hold 186. So I'm not going to trade Amazon, too expensive for me. I look at the 5-year chart. I mean, just look at this movement that it has. It's completely just so bullish, gone all the way up. But what you can see on this, just one thing I noticed, is this nice trend channel you have. So you do have this nice trend channel that it's trading in, as you can see. So if you were to buy Amazon, I'd be waiting for the pullback at the bottom around 170, 175, trying to trade that trend with your stop going to be breaking this trend coming down. That's how I would trade Amazon. Intel stock, I've been watching this stock for a little bit. I'm being very patient with this stock. I'm trying not to buy them until they make new lows. As you can see, there's a lot of negative sentiment around them. And just looking at the previous 5 years, I mean, they went from 163 all the way down from 163, I'm sorry, 63 all the way down to $20, $30. That's a 50% retracement right there. I am going to be buying them long term, but I'm still waiting for my position at $25. So $25, let's see what that retracement is from $30 right now. It's trading at 29, 85. If it pulls back to 25, it's another 15%. So we're almost there. I'm going to start adding my chips in around $26 and definitely loading the boat around 25. That's where I want to get in. And the reason I have that level picked out is because I look at the 5-year chart and I can see that there's consolidation right in this area. So if you put this consolidation in and lower this right down here, this is where your consolidation is, around $27 to $25. It's not going to be a perfect entry, but that's where I'm looking right now. So if we can get it in this zone, that'll make me happy to start buying Intel for the long term. I think that's fine. NVDA, as you can see, this stock has done nothing but go up all the way from 2022, 2024 at present time, it's up 974. So if you look at that percentage gain, I'm sorry, but if I'm not buying NVIDIA at 900. It's up 600%. It's just ridiculous. If you think it has more leg to go, I just worry about the short-term pullback, and it's just too much risk for me to take. But if you are looking at it, maybe an options play, you do have support with this trend channel right here, which is forming, which is not bad. But you also have to be aware that 970 is your top. So just be aware of that when you're trading NVIDIA and just watch for direction change. Plus they have earnings coming, so I definitely would be very cautious with them if you're going to trade them. Tesla, looking at Tesla. Tesla, I am waiting, been patient. Soon I will be a buyer again. I have them in a long-term portfolio. But as you can see, there is clear support at this 162 to 160 level. That's what I'm waiting for. Tesla had this miraculous comeback from 138. They announced, they were going into China with the FSD, and it blasted up 42% from 138 all the way up to 198 real quick, and now it's pulled back. So it looks a little bit more like a pump and dump almost, from 200 down to 167. That's a 16% retracement. I'm going to take a stab at Tesla when it gets to this zone, which is 163. The reason is I see support right here at 163, support here, support down here at 160, a little bit of resistance around 160 right here. And then it held the support from 157 to 166. And now it is retracing back in the last 5 days, all the way from 198, I'm sorry, down to 167. So I'm going to be watching that 160 level like a hawk, probably buying chips around 162. Next, I want to talk about QQQ. The reason is because I think yesterday on Friday was the time to enter QQQ. I had a short position at SQQQ. I sold 20 cents up. Now I'm looking to get it for an even cheaper price, but I might have missed my shot here because looking at this chart, just look at the 1 year. The 1 year is trading at 60 on the RSI. It is retesting these highs. When you look at it on a 1 year chart, this looks like an indecision candle because look at the body. Look how small that body is, 442 to 441. It is trading from 440 to 444. Is it going to get up to these highs? I'm hoping I can buy at these highs again because it's so easy to trade QQQ if you have your stop loss set in mind. So in terms of risk management, it's very easy. I mean, we are trading into this resistance zone here at 449. If it can trade back up to here, preferably 446, 447, that's my entry. And then if it trades up past this, I'm only losing 1 to 2%. That's it. So if I make my entry, let's say, to short in SQQQ, and I buy at this resistance here at 447, I'll trade it to 450. I'm risking 0.5%. 0.5% to make a move back down to retest 420. 0.5% for 5% gain. Sign me up any day. So now I'm looking at Starbucks. I've been watching Starbucks a little bit. I own them in the taxable portfolio. I think it's a buying opportunity. One bad earnings I don't think defines the company. They've split over 6 times. Things might be a little shaky right now. And yes, they've been selling off, but it's not like you're not being rewarded for it. I'm getting a dividend. I'm going to continue to dollar cost average. For me, this is a no-brainer. I mean, just look at them at the 5-year chart. The reason I think it's a no-brainer is because I feel as if we are trading in this zone. Like this is the Starbucks zone right here. And my goal is to buy within the low of this channel, which is around $66 is my stop, all the way back up to 120. And just buy within this zone, and you can sell the waves. But what I'm not trying to do is I'm really not selling them. I'm just accumulating shares. But if you were to day trade this, you buy at $70, your stop loss is below the low of 2022 at $66. So that's where I'm looking at. But I'm accumulating. I'm part of this green bar. I'm a buyer over here. My cost basis is at $82, so I still have more to buy. But I'm going to buy anything under $75. Not even thinking about it. Just dollar cost average, less than 3% of the portfolio. No big deal. Next is PayPal. PayPal is getting hit with that, the negative news of the other payment companies that their guidance wasn't doing too well. PayPal, when you look at this company, it was pumped from all the way from 100 all the way up to 310, sold off. Now are we starting to get the reverse trend? And that's what you want to look for when you trade stocks like this. And I thought this could have been it right here when it went back up to 100 and broke that $85 range. Still got to prove itself. It's not like they don't do well. They make money on their earnings. But you got to be really careful. If $60 breaks, this is going lower. So I haven't bought PayPal yet. I've been thinking about it. But we're holding off for now. I just want to see where it's going to go from here. If it's going to break this $60. Apple, they did that buyback after their earnings. They definitely, sales are slowing, etc., in China and all that. I won't buy Apple if it's in the 180s. I'd rather be buying down here at 160s. So I'll just continue to wait dollar cost average when it gets down to there. But I have my growth fund FSPGX, so I have Apple within that fund. So for me, I don't really trade Apple that much, but long term, I only buy them on the dips. I don't buy them when they're up in the air. JetBlue. Next, we're looking at JetBlue. Own this stock as well. Probably should have sold them. Had like an average price of $7, and it's just I was up 758, and then what does it do? Earnings hits. I didn't realize they had earnings. Probably should have sold. Sells off 27%. Got crushed. So not a bad entry potentially, but I think you can get them a little lower. I think we can wait for the $5 flat range. Then think about making your entry. Just remember, less than a year ago, this was $3.42. Doesn't mean they're doing bad, but you just have to be very careful. Comparing the earnings, just looking at this, January 30th, 2024, 2.3 billion, 2.21 billion. It's not like they're not making money, but they're losing money. So for me, long term, I hold them just because it's an airline, but they usually don't do that well.